On November 30, 1987, an army of 180 lawyers, accountants, financial advisors and corporate executives annexed 6 floors of prestigious New York law firm Paul, Weiss, Rifkind, Wharton Garrison, in a race to close a $985 million leveraged buyout of the food conglomerate Beatrice International. The deal, which would be worth some $2.3 billion today, was the largest leveraged buyout of overseas assets by an American company at that time, but with complicated overseas tax issues, it was falling behind schedule. If even one of the New York food giant's 64 entities in 31 countries failed to meet its financing conditions by the December 1 deadline, the whole deal would collapse. Even more daunting was the prospect of facing the notorious wrath of the Beatrice deal's general, Reginald F. Lewis. Having begun his career as a corporate lawyer, the 44-year-old Lewis had already achieved his dream of moving to the other side of the table to buy and sell companies. 3 years earlier, he had acquired the McCall Pattern home sewing business for $22.5 million, about $50 million today, including a $1 million personal investment, before eventually selling it in 1987 for $90 million, $210 million today. The massive size of the Beatrice buyout, however, was a game-changer for Lewis. The 80s, of course, were the golden age of the LBO. The average transaction went from $39.42 million in 1981 to $137.45 million in 1987. The era offered low barriers and high returns, capped in 1988 by Kohlberg Kravis Roberts' acquisition of RJR Nabisco for $25 billion. The Beatrice buyout would put Lewis among Wall Street's most elite dealmakers, including Nelson Peltz and Michael Milken. The junk bond king of Drexel Burnham Lambert was already a friend and mentor to Lewis, and in the case of Beatrice, a key investor. With the clock ticking towards the midnight deadline, the tenacious Lewis threatened to walk away from the deal if he didn't receive a relatively small $7.6 million transaction fee he was owed. The sound of his raised voice could soon be heard emanating from a corner office as he gave hell to representatives of Drexel. Blair Walker wrote of the incident in Lewis' posthumous memoir, "Why should white guys have all the fun? I gotta be paid," Lewis bellowed, citing the lofty amounts paid out to white LBO masters such as Henry Kravis of KKR and Teddy Forstmann. "What am I, chicken liver? I gotta be paid for my goddamn work." On December 1, the company officially became TLC Beatrice International Holdings, TLC for the Lewis Company, a business that would make Reginald Lewis the first black man to own and run a billion-dollar corporation. By 1991, the Beatrice deal would earn Lewis a spot on the Forbes 400, worth $340 million, or $656 million today, the only black person to make the list of America's wealthiest that year.